The politicians are very courageous. They just send kids out there to die. I always talk about how this business is recession proof and it rides the waves of inflation.
Yes.
Why? Because you can't part with insurance. So insurance is not just physical security, it's psychological and emotional security. You don't like paying the premiums, but at some point you realize that's just the cost of doing life. High yield, low risk.
Yeah.
That's what insurance is.
Yeah, the CFO went to the Bahamas with trust money and was convicted by the SEC and put in jail.
Materialism is not the answer. It makes you happy, but it's temporal, it's temporary, because the price you would pay otherwise is your time
Exactly.
on Earth. Here we are. Hi, everybody.
Hello.
Thanks for joining. We're going to talk about these times right now.
Yeah.
This is, we're in March of 26 in a war with Iran. So I'm not going to go into that. This is not a political show, but we're going to talk about right now, we're in this war for 12 days?
Something like that, yeah.
And this is the mother of all wars. And how does that work itself out for Americans economically? We're going to talk about that.
Mm-hmm. And
specifically, we're going to talk about if you're in the insurance business, how does it affect insurance people? And this is a good conversation because it sort of drives home our message to people listening. Right now, there's economic uncertainties, right? Because the Strait of Hormuz is closed. Insurance companies that insure those huge shipping containers and ships that go through the Strait of Hormuz. Of course, we know 20% of the world's oil comes from the Strait of Hormuz. But the Lloyd's syndicates are not insuring those ships anymore. It's too risky.
Right. Lloyd's of London pulled out of that.
Right. And they've canceled insurance policies. They've stopped. And so nobody's willing to, so what happens next, right? So there's a domino effect because, India relies on that oil. China relies on that oil from the Strait of Hormuz.
Yeah.
So if those petrodollars are not being spent from Bahrain and Qatar and UAE and all these Gulf region states, then what happens is gas prices go up. Mm-hmm. Gas prices go up in the country already. Gas prices are going up. So already, and this is just beginning. The full, I speculate, but I'm pretty sure the fullness of the effects of this conflict war are going to be felt more like in April, May, and June, when we don't even know when the end of this war is. But judging by Afghanistan and Iraq, these wars could go on for decades.
Hopefully not.
Hopefully not. And our condolences to people that have already died on both sides. It's the innocent people that die. And, the politicians are very, courageous. They just send kids out there, to die. But let's not digress. Well, how does that affect us here in the United States economically is that people are going to spend more. And if you spend more on heating and gasoline, it causes other businesses to then have to raise their prices.
Right.
Transportation, restaurants, retail, commerce, everybody's affected by that.
Yeah, it trickles down to every single aspect of our society.
It does. It does. It does. It's very interconnected. And so this causes a lot of industries to have to raise their rates and then, of course, or prices, and consumers have to pay more. And with that also comes the cost of repair, cost of replace.
Yeah.
Well, and this is the insurance part of the conversation for the American insured or the consumer policyholder. What happens, and this is a really interesting moment for those who are listening who are investors, you know, not to sound insensitive, but I've fared a few of these turmoil moments.
Yeah. Yeah, we have.
You know, we had the 2008 issue with the banks that caused a economic upset. But, you know, insurance, you know, got through that. It didn't phase insurance. Then we had the
we grew through that economy.
We did. 2020 happened with the COVID and the economic easing or quantitative easing. It was termed, which diluted the dollar, and that caused, and we're still paying for that today. The insurance industry is kind of normalizing right now. We call that going from a hard market into a soft market. We're starting to see it thaw out from 5 years ago.
Yeah. Well, it hits insurance last.
It does, because insurance ramps up.
Yeah.
Because your policies are 6-month contracts and 12-month contracts. So as this is happening and you're listening to this, trust that your premiums are going to go up. But it doesn't manifest for about 6 to 12 months from now.
Well, and sometimes longer, because insurance companies have to go through the Department of Insurance and submit their documents. It's not a short process.
Well, but they can non-renew.
Yes.
So this is a good point, Jamie. And you're right, when the regulators of their respective states who are there to protect consumers from having insurance companies raise their rates too high, they regulate insurance to protect consumers. Well, then the insurers are like, well, this premium is not going to cover us replacing this insured. So we're going to pull out. So what do? If they can't raise their rates adequately,
Right. Which is what they did in California.
they non-renew.
Yeah.
So the rates do go up, but in a different way.
Right. They have to, they get booted out of one carrier and then they end up having to go to a different place, which is more expensive.
They're going to call, and this is part of the person listening, the investor who is considering, joining Fadaie franchise to be a retail broker. Our insured gets a letter, and then they call, say, hey, I'm being non-renewed. Help me. So who stands to win in that situation? A captive model, which is an Allstate, a AAA, a State Farm, or a Fadaie broker model? The independent model has more flexibility.
Yeah.
So when they call us, say, hey, this company you placed me with is non-renewing, we then remarket that.
Yeah.
Or we
Shop it.
We shop it because we have a plethora of other companies. But those other companies, they're probably more expensive already. So their premium would be suitable for the economic turmoil.
Right.
So what does that mean? At the end of the day, the American policyholder pays more. But here's the thing with and I always talk about how this business is recession proof. And it rides the waves of inflation.
Yes.
Why? Because you can't part with insurance.
Well, it's required by law, so.
Even if it's not required by law,
Yeah.
Even if you have a ton of money in the bank and you say, well, I'm going to self-insure, you're still not going to want to self-insure. Why would you use your money during a claim?
Well, if you can pay a couple $1,000s a year, for example,
Exactly.
for a $500,000 house, would you rather come out of pocket with $500,000 or just pay the couple thousand? How many years would it take you paying that money, you know what I mean, in the event of a catastrophic loss?
And you could use that money and invest in assets.
Yeah.
Why would you invest it in a liability because you didn't want to get insurance?
Yeah.
It's a no-brainer,
Yeah.
right?
Makes way more sense.
So what you just described, Jamie, is transferring of risk,
Yeah.
which is what insurance is. Concept of insurance is you're transferring your risk to an insurer who not only pays you $500,000, but you have to add all the lines on your homeowner's insurance policy. If you'll pull that out, you can see coverage A, B, C, D, E, F.
Personal
right?
property.
You add all those up, the respective insurance company is covering you for like, we're talking about a homeowner's policy.
Yeah.
They're covering you for like over $1 million. Because if you add all those up,
Yeah.
for what, $3,000 a year, you're getting over $1 million of coverage.
Well, and people don't understand, or maybe not understand, but they don't think about all of the other things that are covered under home insurance policy. We're talking about all your furniture, all of your belongings, all of everything that you've spent money on and your personal items. Those are all covered.
Not everything is covered, but there are 16 perils
Right.
on a standard homeowner's insurance policy that are covered. And those 16 perils are fire, smoke, wind, hail,
Right.
etc. And it behooves the person. That's why this product is something that nobody goes without. Whether you own your house or you have a mortgage, you have to have it. So the point is, right now, this is, a lot of people are losing money in the stock market because of the ebb and flow, which is a natural thing. Your financial advisors will probably tell you to just, don't freak out. They will tell you to cost average, which is great. I'm not a financial advisor. I'm not advising you, but I do believe in diversification. And I do believe in investing in assets. And I do believe that the insurance retail space, which is the one we offer, is a safe haven, not only for you to, invest your dollars, but to grow and stretch your dollars. What better asset than the one you can control? And what better asset than the one that is franchised?
Yeah.
It's like a bubble within a bubble, right? It's like a double protection.
Yeah.
So in these times, ladies and gentlemen, Jamie and I are feeling, we're not, we hate what's going on, but that's just life. But financially, we're thriving in this market because we're here to help people cover their assets with alternative solutions. Because we've done this before. We've weathered out a lot of storms.
Yeah.
And what happens in a more nuanced level now, though, for like dollars and cents, those premiums are going to be more expensive.
Right.
And then our commissions are more expensive. You see that?
Yeah. We make more.
This is literally what I'm talking about when I talk to you about how it rides the waves of inflation. Because nobody can part with it. Rates do go up. People still have to pay for it. Who are they going to come to? To the independent broker model, which is what the Fadaie franchise is. Then we continue to help those customers. Now, you would think that during this time when things are going to get more expensive, people would cancel their insurance. On the contrary, people double up on insurance.
Yeah.
Because there's an emotional factor too.
Well, yeah, it's their assets. It's things that they've worked hard for, some of them all their lives. So they're not going to want to part with it because it gives them security.
It does. And it gives them also emotional security. So insurance is not just physical security. It's psychological and emotional security. Because a lot of what these assets mean to them, there's meaning behind these assets. These assets have sentiment behind them. They are connected to love.
Yeah.
They're connected to dreams. to memories. You see?
Yeah.
So articulating our offer, our model, just a little bit more with each podcast, we seek to refine our offer to make it more palatable. Because insurance is abstract.
Very, yes.
And speaking on that, let's do that right now. Let's allow me to articulate what our offer is. Again, because it takes refining.
Yeah.
I need to explain it to, no offense to anybody, but I need to successfully explain our offer to a 10-year-old.
Yeah. Simplify it.
Because it's abstract.
Yeah.
You don't expect any adults to know insurance. It's not like that.
Yeah.
Insurance is something you just pay for, and you need to have it, and it's important, and you really appreciate it when you have a claim and it's covered, right? That's how it is. You don't like paying the premiums, but at some point you realize that's just the cost of doing life.
Yeah.
So, but it is abstract because you're not an expert at it, and we are. And so we're sort of illuminating, the subtleties of insurance. So about our offer, and we're going to have to do something fun today. I'm going to do my best to articulate our offer a little bit. You can ask some questions on it. And then after we're done with that, we're going to have Jamie run an Excel sheet. We'll put it up on the screen. And she's going to run us through how your investment would work when you invest in a Fadaie franchise. It's amazing. And we're going to show you how it works from year 1, 2, 3, 4, 5, 6, all the way to the 10th year. And we're going to show you how the compounding works, because the residual value. We're going to demonstrate how the enterprise value of your branch business works if you want to sell. So it's really fun. I'm excited about this.
Yeah.
So we're gonna come up with that in a second. But to articulate our offer, we have to do it in two ways. We have prospect A, who is a newcomer to the industry. By the way, we will take on people that are brand new.
Yeah.
Right? As long as they have certain criterias. So, and then we have prospect B, who wants to invest. Prospect B is somebody who's already in the business. They're already a broker. And they're independent, and they want to plug into Fadaie franchise. So we'll start with prospect A. In actuality, what we do is we teach the insurance business to somebody novice and help them succeed and create wealth. And we do that through the Fadaie franchise. We're educators. The reason is because we love the business and we've succeeded in the business. So it's really simple. It's not easy. The business is not easy, but we make it simple. Okay, we make it simple because we realize what it takes to make it lucrative.
Yeah.
And we do that by shortening the distance of time.
Yeah, because we have the infrastructure built already. So all they have to worry about is selling.
Don't worry at all, actually.
Well, think about.
But be concerned about, we set it up where you're just producing business. Or you've delegated even that part and you're just mingling with people, and let's say you're a good networker. You go to these parties and that's what you love to do. You love to talk, mingle, and then tell people that you own an insurance agency, and then you procure leads that way. So if you like, you could do it that way. and then hire an agent. So that's one way to do it. Or you could come in as a newbie and say, hey, I want to learn the business, Cash. Sensei, teach me.
Yeah.
And then I can teach you the business. And you can be in the trenches with me in our dojo. By the way, look up our website, FadaiEinsurance.com, and there's a franchise tab. And in that franchise tab, you can request a quote, and we can talk. And you can see all the pillars, the 7 pillars of success. It's all in there. And there's going to be some new testimonials that'll be coming up on this page. But anyways, so that's it, really. When you buy a franchise, when you invest in a franchise, what you get is consistency. You get infrastructure. You get a proven system. And that causes you to get a strong return on your investment. And as we said before in prior episodes, cash flow is king.
Yeah.
When you protect people's cash in this amazing business, you also then grow your own cash. And you get to have that from yours truly, Cash. A lot of cashes here. So that's prospect A. Any questions on that?
No.
It's pretty simple.
Yeah.
If you're sold on the insurance retail space, which I argue is the best business out there, I don't think there's any other business as good as ours with the features it has. And the second thing is, if you want to like collapse time and do it quickly, you're an investor-minded person, then buy a franchise. Now, there's a couple of them out there. We're the best one. And the reason is because we lead with commercial.
Yeah.
And you get to work with the founder, the person who made it.
Well, I would argue it's because we give you leads.
The third
That's
component,
very uncommon.
we give you warm transfer leads, whereas most of our competitors, they expect you to go
Yeah.
procure your own leads. Problem with that is it's a third of your time that gets sucked up. So if you're not using that time to quote, then you're stunting your growth. So yeah, warm transfer leads, we provide that. And the fourth component is you can sell cross lines, cross states, straight lines. We cover Texas, primarily California, Texas, and Florida, which are the biggest states.
Yeah.
3 of the biggest states.
We have more than that, but yes, those are our primary states.
We have about 30 states, but those are the primary states that we have inventory for. So for the prospect that's brand new and you want to learn this trade, then I believe we can do the best amongst our competitors and set you up to win. So that's
Definitely.
prospect A, right? Prospect B is the person who's like already experienced, they have a book of business, but they haven't built a team culture. They don't have the infrastructure set up right.
Yeah. Market access can be an issue, especially right now.
Struggling with carriers, appointments. And they're struggling with technology.
That's a big one.
And those are some of the reasons somebody that is already a broker that might consider joining
Yeah.
the Fadaie franchise. Or perhaps they're struggling with marketing, not enough leads. It's very competitive.
I've heard that a lot with other owners out there.
Yeah.
Leads and market access are like the top 2 things. And then the third is technology, because there's so many different options. It's like, which one do I choose?
Yeah.
Which one is the best for my agency? How do I keep ahead of AI? What's the next thing? How am I going to stay afloat? So that's what I've been hearing among owners as of recent.
It's a community business.
Yeah.
What you get with a Fadaie ecosystem is you have a team of experts, basically, who conduct conversations about insurance on the dojo, the Zoom channel that we have. So for those reasons, we believe either prospect A or B can stand to benefit from this business, from our offer. So, and let's not forget, even prospect B, we're also educating them because we're educating ourselves. We practice the business. We're constantly educating ourselves. It doesn't stop.
Yeah.
You know, even though maybe I consider myself a black belt in the insurance, there's different degrees of black belts.
Well, and the market's always shifting as AI shifts, as the way we live shifts. All insurance products also have to shift. So that we've seen that with Airbnb, we've seen that with other products that have come out in the last 2 decades, where it's like, oh, Airbnb didn't exist before, but now it does. So how do we ensure that, right? So there's a constant evolution. There's a constant education that has to be done as you evolve in this industry. So it's definitely something that is ongoing.
So while you prepare your laptop now with the Excel sheet, go ahead and do that. And we're going to pull this up in about a minute or so. But yeah, Jamie's right. I mean, the issue is if you're a real estate investor and you have long-term tenants, that's great. However, you might find a better model to make more money on your investment. And that may take you to the route of Airbnb, short-term vacation rentals, right? And let's say you're with a captive carrier, like a State Farm, Allstate. Well, what you'll find is that they don't have an appetite for that type of risk. That's too risky for them.
Very true.
Right? So how that works with a brokerage is because we have a plethora of different companies. We have these companies that are like, we love short-term vacation rentals.
Yeah.
And it's affordable. So then you can sort of convert your landlord policy, we call that a dwelling fire policy, into a rewrite with Fadaie. Now, why am I saying that? You as an investor, as a Fadaie branch owner, have more ability and latitude and flexibility to cater to these type of investor type clients. Right, so that's kind of what that is.
Yeah, definitely. I think if you're a realtor, the insurance space is a really good pivot. We've had that. We have one current person right now who's pivoting from commercial real estate.
Yeah.
So it is definitely a good pivot if that's something that someone is considering.
She's a realtor and she's like, well, it's dead. Nobody's investing, and now with this war, people are going to be less excited. Because they're gonna wait for the knife to drop. You see, nobody wants to catch a falling knife, so nobody's gonna make a real estate move. Some will, but not, generally not. But insurance keeps on trucking.
Yeah.
Right. So right now we're gonna pull up an Excel on our screen here, and we're gonna make some assumptions, and let's assume you have purchased a Fadaie franchise. And what Jamie's going to do with this Excel program, and by the way, we can send you this program. Go ahead and send me a DM, and I can send you the Excel, and you can work this out on yourself. But we're going to demonstrate today because it's so difficult I brag about our industry and how lucrative it is, but unless you see it, you won't really appreciate it. Right. It's one of those type of products. It's like those those commercials on TV that you have to demonstrate the dress.
Yes.
That's how it is.
Infomercial.
So we're making the assumption that you've invested, I think it's $100,000.
The initial investment's $50,000. Suggested is $100,000 so that you have enough cash flow to cover other things that may come up.
Got it. And we've also baked into this Excel sheet the rate of attrition, which is in our industry 10% of your book. When we write business, we call that a book. It falls off just It's part of life. It falls off, somebody moves, somebody finds a different carrier or whatever. So 10% is baked in. We've also baked in the 90% retention, which is the flip side of the
yes.
attrition.
Your renewal book.
Your renewal. And we factored in this is the beauty of it, the ongoing years.
Yeah.
Because remember, after the first year, you then start to get renewal commissions. That's the residual part of it. So Jamie's going to demonstrate now. Jamie, I'll let you take it and run that demo for us.
All right. So this is our Fadaie franchise cash flow projections worksheet. So the initial cost of the franchise, or the franchise fee rather, is $50,000. This sheet, we're assuming that this is prospect A. So you don't have a beginning book of business, commercial or personal. So year one, your monthly production, we're looking at about $30,000 in commercial lines, meaning business owners' policies, and then about $10,000 in personal lines. And then each respective year, going up to year 10, you're incrementally increasing that production per month. So as you can see on this sheet, it goes down to year 10. By year 10, we're assuming that you're making $80,000 a month in premium, that you're writing that business, right? So it obviously could be more than that. There are people who write more than that, but this is just for demonstration only. As Cash said, our retention rate is 95% for commercial lines and about 91% for personal lines. Commission rates vary based on production, but as of right now, we're going to give you some averages. So it's about 11% on new business and 10.78% on renewal for commercial lines. Personal lines, 11.17% and on new business, and then 11% on renewals. And then down to the juicy part, the good part, right? Is the split. So the franchisee gets 70% of that commission on all lines. Now you're probably wondering, what are the expenses? So this is really up to the franchisee how they want to approach this. So we're putting this in here just as an example, and you can go in here like Cash said and request a copy of this and kind of work through these numbers and see how it looks for you. But this is what we have here. So $45,000 annual employee compensation. You could look at that as something that you're compensating yourself for, and or if you're going to hire an employee. Again, and then monthly lease. So that cost of an office, if you decide to have an office, utilities, POS software fees, so the CRM that we provide and all of those fees, and then any other miscellaneous expenses. The only other expense that we have that's baked in is the grand opening and advertising expense. So this is where we're going to blast you out on social media, website, and all of that. That's a one-time expense. And then the National Advertising Fund, which is 5%. Now let's get to the good part, right?
This is the beauty of it.
So if we go to year one, we're assuming that we don't have a book of business, but at that rate of production, you're looking at a total production of about $480,000 of premium, right? So your total book size is almost $500,000 at the end of the first year. So we're looking at the gross commissions for commercial lines and personal lines based on those percentages. And then our total gross commissions for that year is $54,000. So you spent $50,000 on the franchise. You basically broke even, give or take, right? So the franchisee commission is $37,000, and then the total expenses is $71,000 with that payroll that you included. Now note, the enterprise value at the end of year one is over $100,000. So if you invested $50,000, and you decided, hey, I don't like insurance, I want to sell it within the first year, you doubled your money in the first year. So that's fantastic. But if you look down at the bottom, now we're assuming that year 2, 3 through 10, you're producing the same amount. This is the assumption in this sheet. Obviously, you could hire people, you could scale, you could have multiple locations. But in this particular example, we're doing it based on the numbers on the previous page. So notice at year 2, your ROI is 2.5 times. And as you build year over year, 2.75. And then if you go to year 7, we're compounding, right? 3.5. So look at what happens. We go from $108,000 enterprise value to year 7 at $1.8 million at that rate of production. So if we go all the way to year 10, you're looking at $2.5 million without hiring anybody, without really scaling at all, right? And you're looking at about 3.5 times. Now, given there's a market rate value in any business, and there are different factors, but we are a preferred agency. We have preferred business, preferred carriers, and for that reason, we're looking at this with our retention rate and all of the other factors involved at a 3.5 evaluation. So, and especially right now, like you were talking about the market being hard or soft, how many PE groups have been knocking down our door asking us to sell? So many.
Yeah, private equity association or groups
Yes.
are heavily targeting.
Oh, they're targeting us right now. So it's definitely something to think about in this kind of economy, or the economy that we may be going into, that, there is a value there for that book of business.
Especially because we've diversified it into commercial and personal lines.
Yes. And when you have that, commercial lines are worth more than personal lines.
Yes.
And so there
From
are
the perspective of an investor buying,
correct.
they find more stability in that.
Yes.
Because it's like, oh, that's going to ensure that we get more of our premiums, more of our commissions, more revenue.
Yeah.
Because it's unlikely that if 1 or 2 or 3 policies cancel, the rest will all cancel. It won't.
Well, and statistically speaking, an agency like ours, we're generalists. We're not niche. We're not a niche agency. So sometimes, historically speaking, niche agencies that maybe, for example, my dad was in the insurance business in 2008. He was in the specific sector of commercial construction, right? And so he took a 50% hit to his income. Why? Because 2008, the housing market crashed. Nobody was building homes anymore. All of that, right? So where in the past people said, go into the niche market, yes and no. Like, you don't want to have all your eggs in one basket. So to have that diversification is key here.
Be a generalist, and then do niche.
Both, yes.
So build a nice mutual fund, if you will, of insurance book, and then do niche.
Yes.
Right? So you do both, and then, you create a little bit of an invincibility factor that way.
Correct, yes.
So,
Yeah.
So this was good. Thank you, Jamie. That was amazing, because where else can you get such a return on your investment in terms of, doing it without going to like a casino, where you have this calculated low risk investment,
yes,
with a high yield, in a short distance of time. This is not a 30-40 S&P model.
No.
This is a invest in a business that's recession proof model, that's also in a franchise model.
Yeah.
So you've flushed out a lot of the dangers, but you've maximized your ROI.
Yes.
And you're going, well, who am I dealing with? Well, you're dealing with people who've been in the business 20 years.
Yeah.
So we kind of become a consultant for you as we teach you the business, as you get to use all of our proven technologies and strategies in becoming successful.
Yeah.
So your money is making you money for the next decades. Plural.
Right. And just to elaborate a little bit, in the last 20 years, about every 4 to 5 years, we've doubled in size, us, Fadaie Insurance. So now that's starting to compound, and that time frame is starting to shorten. So that's the beauty of insurance, because it's like the snowball effect, right? Where you see the numbers continue to rise and compound and compound and compound. So it's a very interesting and unique space in that way. So that's how you can go just in the matter of 10 years.
Yeah.
You can go from an enterprise value of $100,000 to $2.5 million because that compound effect. Because the more policies you have, the more they're worth, the more they're worth, the more they're worth. So it just keeps compounding.
Right. So there's two factors there. And another way to say what you just said is when you combine momentum and velocity.
Yes, that's a better way to say it.
Right? Momentum and velocity creates that effect.
Yes.
Right? And investors love that. That's why the private equity groups who are in the insurance space, they realize something that many agents don't. And what they know is that this is an awesome business. We want to be in this space.
Yeah.
Because their investors like low risk investments.
They know they're going to get their money back in a few years.
Yeah. They like
guaranteed.
Right. High, it's like the best of both worlds. High yield, low risk.
Yeah.
That's what insurance is.
Yeah.
And that's what we, the Fadaies, bring you into. Because you can't do it alone. Because
not in this business, no.
Not really. And you would spend more money and waste more money if you started, like let's say you went and bought you can buy an insurance agency.
Yeah, you can.
But you will expect 40% of that relationship, the book, wither away.
Yeah, the attrition's higher because it's a relationship-based business.
That's right.
Yeah.
So you'd be wasting a lot of money. And once the 40% is gone, which is typical, you can look this up on chat. The other problem is you don't know, you kind of don't know what you're doing. So you have to make mistakes.
Yeah.
To learn.
Yeah.
So that's the consultant part. So, I bring you my distilled experience, basically, and hand it over to you. So I think today in 2026 in the United States of America, if you're looking to get into the retail broker space, Fadaie is making the best offer. I think our offer is set apart and for those reasons. And that's the reason these PE companies are
knocking down our door
every day. Yeah. I just had one email me today.
I had a few last week.
Yeah.
It's not worth it for us because you guys may be wondering, why have you guys been talking about all this esoteric stuff and why are you just now getting to this offer? And I think the reason is because we want you to know who we are. Who we are as a company, who we are as an ethos, who we are as a culture, and really understand that we're in it for the right reasons. We're people first. And there's a lot of companies that are out there that are not. And so they're more, let's use AI as much as possible. We use AI, but we're not using it to the effect of displacing people, right? We still believe that people are very important to this business and to our longevity as a whole. And so I think that's why, these past several podcasts or basically almost all the podcasts that we've done have been focused more on who we are as people, because we want to say, hey, yes, we have a great offer, but we also this is who we are as a company.
Because when you're investing in anything, you're investing in the ethos of that entity, that culture. You're not just investing in a business, but who drives various decisions in your investment are the executives. And you should know who they are. And you should know what their mindset is.
Yeah.
So we're people first. We believe humans, when educated properly, and that education requires energy allocation.
Yeah.
That's why we talk about metaphysics. Why do we talk about nervous system, physiology? Why do we talk about esoteric practice? Because we believe in the people. We believe in humans. We believe humans are critical, and we are here to help humans become better, because that's what we've done. We've humbly bettered ourselves, and we will continue to better ourselves, because I think it's an intrinsic part of humanity is to look to improve. And so that's why we mix the metaphysics into our offers, because you ought to know who you're investing with.
Yeah.
It's a very unified sort of offer. We become one. It's not a separation.
Well, if you're going to spend 8 hours a day with someone, you want to make sure, potentially 8 hours a day with someone, you want to make sure that, you're on the same page.
Exactly.
That you agree on things, that you see things the same way. And I think that's why we started it the way we did.
Yeah. It's the approach that matters. If you know what the approach is, then you have meaning. And if you have meaning, you have power. And that power exudes out of the phone call, the emails, the text messages, and people will hone in on that. And you will have greater success that way. So that's the reason we do what we do. And that's why we our shows here are a combination of those things.
Definitely. Did you want to tell them a little bit of our story, like a shortened version?
The reason we believe in the franchise to do this, because some people asked, well, why don't you just hire
we've had people ask us that,
insurance agents and just scale your agency that way if you're doing so well. And I'll tell you why. First of all, to back up, I started in the business as a franchisee. I was a franchisee. I was part of a franchisee called Brooke Insurance, Brooke. And I did really well the first year or two. This was 2000. I started in 2006. Right after I learned a little bit about the business, I was an employee at Allstate. But then I dreamed of having an agency, and Brooke Franchise gave me a path. So I did it. And I did very well, like I said. 2 years into it, however, 2008.
Right after we got married.
I convinced her dad to give me his daughter's hand. So he's like, great. And he was an insurance broker, unknown to us when we first met. We didn't know that, but serendipitous. But he approved and we got married. And then in 2008, when, as I said earlier in the podcast, that's when we had a recession. It was the beginning, the commencement of a recession. And
we stopped getting paid right 6 months after we got married.
Yeah, our commissions, our revenue didn't come in. So there was a serious moment in those days. But the reps of the carriers that would visit my office when I was with Brooke, they really believed in me. They saw the production. They saw my dynamic approach. And they offered contracts. So we started Fadaie Insurance in 2009, April of 2009. And we basically started over.
Yeah.
Okay? So why am I saying this? Because I started with a franchise. I believe in the franchise model. There was very good things with the franchise model. It turns out later on, I discover in retrospect that Brooke Insurance, the franchisor, didn't know that at the time. Even years later, I didn't know that. But now I know that they were convicted of some nefarious things.
Yeah, the CFO went to the Bahamas with trust money and was convicted by the SEC and put in jail.
Right. So I endeavored to one day do the franchise model, but do it with integrity and honor. And
do it the right way.
Do it the right way and focus on the energy of it, the holistic approach to insurance.
Yeah.
A path that is sustainable, that is heart-centered, that also allows for a successful family life, successful relationships, and ultimately spiritual ascension. That's kind of what Fadaie's trademark is. Fadaie means sacrifice. That's what my last name means. And it's the sacrifice for the good. It's the sacrifices we make to become our best version. And we started this franchise to create just that.
Yes.
For the individual to have it all. have a successful professional career in the insurance space as an entrepreneur, have freedom, financial freedom, but also have mental freedom, emotional freedom, spiritual freedom, physical freedom, familial freedom. The reason that's going to happen is because you'll discover through intuition that this is an agency or a franchise I want to work with. These are the people. This is the human capital I'm aligned with. So that's why we award agencies, franchises, to people who have that same sort of electromagnetic signature, who have that same resonance of heart-centeredness, and who want to create wealth, not just become rich. It's not just becoming rich. Money or materialism is not the answer. Materialism never makes you happy, but it's temporal. It's temporary. Okay? It's not sustainable. We believe in sustainability of joy and happiness.
Yes.
And that comes by virtue of a holistic approach. So you can converge your professional life with your spiritual life, emotional life, mental life. It all comes together.
Yeah.
So that's kind of our trademark. That's what sets us apart.
Yeah, because you're basically gaining a partner, right? To simplify it a little bit, you're gaining a partner that is coming alongside you and really helping you through the process. When you started, Cash, you were sleeping in your office. You were going to the gym to take a shower. You worked 7 days a week. You were getting the leads yourself. You were going to the dealerships, trying to do everything on your own 7 days a week, building this thing. And so you know the tenacity that it takes and the grit that it takes if you're starting this from scratch. So to hand someone a fully fledged system that can give them the opportunity to get on, jump on the ground running is priceless.
I think so, because the price you would pay otherwise is your time on earth.
Well, like I said, you were working 7 days a week.
I was, and I did spend 20 years sacrificing to get to where we are today, and raising a family of 3 kids and 3 dogs. And I think I'm qualified to help you. Whoever wants to do this business, I'm qualified and confident to help you succeed in this business. So that's kind of, it's in those subtleties of the 20 years that I've gained this confidence.
Right.
And I did whatever it took. Right. I did asymmetrical battle, which means a military term for sleeping in the office and understanding that your dollars should be reinvested in assets. And assets at that time meant leads. And my time was an asset too. So if I spent my time on leads with a potential conversion rate, that was the vision. And that's what I've been doing ever since.
Yeah.
And that's why it requires energy.
Yes.
It requires meaning. It requires vision. So you can't divorce the energy part of the conversation.
No, not at all.
Which is why we discuss it. Like if you're looking at it just from a material perspective, then this is not our path. Our path is not just material; it's the rest of it. It's all of it.
Well, and that comes to also, you want to write the right type of business. You're not just trying to shove a round peg in a square hole. We need to make sure that the business that we're writing is clean and good business, so that we're doing well by people first, right?
There's a couple of, glad you brought that up, Jamie. It's people first. So our insureds are really important. Fiduciary. Yes. We have a fiduciary with our insureds. We also have a fiduciary with our insurers.
Yes.
We got to do right by them. We got to give them the right business. We got to follow their guidelines, their underwriting guidelines. We also have a commitment to our agents, producers, franchisees. As leaders, we have to be above reproach. We have to be consistent. But that's beautiful for us because we love the business. And if you have love, you have energy. And we have to do right by the legalities, the Department of Insurance. Make sure that we're also aligned with doing the business the right way. So your reputation is the key. So that's why we believe it's not just materialism that drives growth, because we need growth that's long-term,
sustainable. Jinx.
And so that's why we approach it that way. You want to have volume in production, sell a lot of insurance policies, but not at the cost of writing the business that's erroneous.
Not worth it.
So we teach that so that you don't have a E&O claim.
Yeah.
And you don't have carriers that suspend your code or let you go and say, we don't want you to be a distributor for us anymore.
Yeah.
So these are the unspoken things that perhaps your interview with various other franchise competitors, you're not having. And, this podcast helps you ask better questions.
Yeah.
So if you're working with a Goosehead or a Brightway right now and you're entertaining the idea with a We Insure group or whatever, there's several other models like ours. Renegade is another one. Then you have, by virtue of this eavesdrop discussion, you have a lot more questions. And in life, it's about the questions you ask. So this is an informative investment of your time, I believe, if you're considering buying a franchise in this space.
I agree.
So, but that's our background. That's our offer. I'm glad you were able to demonstrate how the numbers actually work. And the numbers don't lie. And the main secret sauce, as we discussed, about our offer really hinges, if there was one thing that it hinged upon, it would be the residual income. That's what sets us apart in our industry.
Yeah.
The second thing would be that it's not something that's going to go out of style, insurance.
No.
You can't, I keep saying you can't part with it. It's those two factors that make the difference. And that's why our business is set apart. It's the residual income. You can't get that with most businesses. And it's the part that people can't go without, which is insurance. That's what causes our offer to be, what it is.
Right.
So, we started this franchise to also revolutionize our space. And we talked about private equity. We believe that if we unify with the prospect B, like other brokers, we believe that it behooves them to not sell to a private equity, but rather put their cash flow in a different system where they can continue to make that cash flow happen, even in their 70s, 80s, 90s.
Right, yeah. As these carriers are pushing out the small guys and the market's changing, it behooves us as brokers to join each other, to help each other.
Yeah.
So that we have more numbers, more value in the sight of the carriers and in the sight of insureds, because the more we write, the more access we have, the more commissions we make, and it just keeps going, right?
And that's why it's important for you to realize who you're dealing with, because it's the leaders of that entity who make critical decisions. And so it's important you understand what our philosophy is. It's like, for example, I'll give you a metaphor. It's like, let's say you're buying a stock. You're going to go to Yahoo News and you're going to want to find out who's the CEO.
Yeah.
What kind of people are they? What kind of decisions are they making? Is it managed right? Is it not? So in a sense, we draw that same parallel with us, is that you're meeting your, executive leaders in this way before you make the investment. So I think that's important.
Definitely.
But what's going to happen to the person coming in? The biggest thing for them, the prospect B, this is a broker who already is in business. Not only are they going to elongate their money supply and not have to pay Uncle Sam, they actually get more write-offs. They have continuity. But the number one thing that happens for you, prospect B, is you get your time back.
Definitely.
Yeah. And that's priceless.
Because we have a done for you system, automations, follow-ups, all the things are already done.
So that takes a lot of weight off somebody's shoulders, and it increases their health, increases their well-being, and then they can get back to doing what they love to do in the business or do something else. Doesn't matter. But you probably will you'll have a renaissance and say, my favorite part of the business was this. I get to do that now. Yeah. Because we have systems in place, because we have delegations in place, because you have a CRM that keeps things organized. And, you are part of a leadership team that believes in profitable business. You don't have to worry about getting your, access to the carrier cut.
Which happens a lot, unfortunately.
Yeah. You don't have reps breathing down your neck, asking you to sell financial services to keep your appointment. A plethora of things. You guys, whoever's listening now who's in the business understands our lingo. So, that weight gets lifted off and you have continuity of your cash flow. Not only that, you increase your cash flow because we have more flexibility and the ability to sell more. And again, as rates go up, premiums go up, commissions go up, and the numbers for those distributor agencies like us who keep our books clean, profitable, we then end up getting more exclusive markets, more carriers to write with, and
higher commission rates.
Right? So you can have continuity, enterprise value, bigger multiples. We see that happening. And the more people join our ecosystem, that also benefits the whole, right? Everybody that joins, who participates in our success, well, that success and participation gets reinvested back into the whole, and we continue. And you might say, well, Cash, how are you going to manage all these locations? Well, we have assistant senseis that come who will learn our ways, teach our ways. And my joy is to have more dojo sessions and education sessions. So I see myself in the future even having one-on-ones with our franchisees, right? And get in there and Zoom and troubleshoot, find out what areas they can improve and things like that. So my involvement will be there. But the key to our success thus far has been consistency, creating the right systems, bringing the right people into the team who are aligned with our ethos.
Yes,
and that's
100%.
That's going to continue to happen.
Yep.
So anyways, but that's our message.
Yes.
We will continue to be on this podcast weekly to proliferate and let people know, promulgate our offer. As I said before, these are long form podcasts. You can also go to our website. There's a franchise tab. many ways to get a hold of us. Feel free if you want to set up a time, Zoom meeting, or phone conversation about our offer. We offer these franchises in a lot of states, not every state though. So we don't offer it for California right now, and some of the western states like Washington, we don't offer it there, but we do offer it for Texas, Florida, Georgia. Get with me and I'll let you know what states we do offer. It's usually the red states that we offer it.
Yeah, there's a lot of red tape and paperwork that has to be done with the others.
Eventually we'll offer the franchise model in those other states as well. But currently, get with me and we'll discuss the ins and outs of that. What, anything else you wanted to mention before we say goodbye?
Just if you're interested and you want to go over the spreadsheet and see if this is a viable option for you, please reach out and feel free. Cash and I would be happy to jump on a call with you. Go, like you said, go over it on Zoom, maybe put some different variables in there and see what it might look like for you personally. So yeah, feel free to reach out.
Appreciate it.
Thank you.
See you next week.